Hello and welcome to a series of video on mapping a typical banking industry scenario by using AHC, Accounting Hub Cloud. Uh, we call it FAH as well, Financial Accounting Hub. The typical business scenario, what we are going to cover is, let us name it, it's money changer. It happens basically in a banking industry which trades into different currencies. So the idea how we are going to cover is first I will explain, let us go through the business scenario what we have, and then we will map that scenario uh, in application in Fusion Financials. So let's get started. So the business scenario of the banking industry is something like this. Let's say we have a traveler from Canada. So he's carrying Canadian dollar. He comes to India and now he has to go to Singapore. So before going to Singapore from India, he want to change his money, the currency. So he's carrying, let us say, 10 Canadian dollar. He want to convert it to Singapore dollar. So he goes to a banker, any money changer, and he gives 10 Canadian dollar and asks for equivalent Singapore dollar for that day. As the money changer is, or the respective bank is in India, so the functional currency is INR. They record all their uh, transactions finally in INR. As far as the business transaction is concerned, it may be one transaction for the traveler, but as far as mapping that transaction for enterprise application such as Fusion Financials, it's a two-step transaction. So in the first step, the banker is taking 10 Canadian dollar at some rate, the buy rate on that day. So it's a buy transaction that happens first. So here the money changer takes, assume that 10 Canadian dollar at the rate of 1 Canadian dollar to 75 75 INR. Sorry for this mistake. So that's a buy rate on that day. And so the accounting entry which would be passed in money changer's book would be something like this. They are taking a cash, so cash account debit. Entered amount would be 10 Canadian dollar. So this is a entered amount. And as their functional currency is INR, so accounted amount would be 10 into 75, 750 INR. The debit will be offsetted to a cash pool account what they maintain. So the accounting interest expected for this transaction is, for this buy step, is cash debit 10 Canadian dollar accounted 750 INR and cash pool credit 10 Canadian dollar and 750 INR. So that's what I took, a 10 Canadian dollar from the traveler. Now I'm giving Singapore dollar to the traveler. Assume that sell rate for that day from Canadian dollar conversion rate by the money changer on that day between Canadian dollar and Singapore dollar is of 1.5. So, and exchange rate between Singapore dollar to INR is 50. And assume that bankers' cost of maintaining a Singapore dollar is of 48 INR, because they keep on buying the Singapore dollar. Someday they might have bought in 50 exchange rate, some other day 52, some other day 48. So it will keep on averaging. It's just like inventory transaction, where the uh, it, the rate keeps on getting averaged. So that average rate is 48 INR. So the cost for the banker on that day is cost for the Singapore dollar for the banker is 48 INR. That day, as per the market fluctuation, the selling rate of SGD is 50 INR. So I'm maintaining my cost of buying the Singapore dollar for the banker is 48 INR, but I'm selling at 50 INR because of the money, because of the market fluctuation. So here I'm making a gain. So, and the conversion rate between Canadian dollar to Singapore dollar is 1.5. So I give the traveler 15 SGD. Now the second step here is the sell transaction, and the expected accounting entry is something like this. It's a cash pool account, 15 Singapore dollar at the rate of 15 into 48, that is 720 INR. Because of that rate, that is the cost for me to maintaining the Singapore dollar. But actually I'm giving a cash of 50 Singapore dollar, which gets converted to at the rate of sell rate on that day from Singapore dollar to INR, that is 50. So 50 into 50, 15, sorry 50. So the accounted amount would be 15 into 50 is equal to 750 INR. And here in this transaction, I'm making a gain. So the gain loss account would be debited to 30 INR. So this is the accounting entry I'm expecting. So just understand, I am doing, as far as business is concerned, there is a exchange from Canadian dollar to Singapore dollar, but in the system it's a two transaction and so two set of accounting. This is what we have to achieve. So the requirement here is, let us take a data where I'm taking 10 Canadian dollar and giving 15 SGD and convert that transaction into this set of accounting by using Financial Accounting Hub or AHC, Accounting Hub Cloud. So that is it as far as the business scenario is concerned. In the next video, we will discuss how to achieve this by using AHC in Fusion Financials. Thanks for watching. Please watch the next video for mapping to get understanding on the mapping to AHC. Thank you.